Welcome back to the show. Let's talk to Eddie Tofpik. He's the head of foreign exchange at ADMISI. Morning to you, Eddie.
Good morning.
Right, let's talk about South African rand. You kindly sent a chart. Is this one-way traffic at the moment?
It looks that way, and you've got two major events. One is happening at the moment, one will happen later on this month. And I'm stepping out of my usual comfort zone.
Which stuns me, if you're talking fundamentals.
Well, one is the proximity of what's happening in Zimbabwe, which has an impact on the local currency there as well.
Yeah.
So that one is giving a little bit of tenderness to this market, and we've seen some movements backwards and forwards in that currency, but not directly, but it's just something to bear in mind. The other one is later on this month you're going to have a reassessment of the ratings for South Africa, and informed discussion seems to be that it's going to be pretty poor. So that's why you've seen the movement up in the dollar rand.
Yep.
It carries on. You've got this beautiful Andrews Pitchfork. September, October, I've drawn it. The middle line, the middle tine of it, which that's around about 1441.28 at the moment. That's, you know, it's where the market is an attractor. It's moving above and below that. It's keeping within them, and even the recent lows in November, if you look at it, they're parallel to the tines. So they're actually running parallel to the actual proposed resistance and support lines of the market. So I think that there is veracity in it. It is a good thing to have. All the moving averages point higher. I think you'll have a try higher. It's not coincidence, I think, that we saw the recent high around about 1458, and that was at a Fibonacci level going from the May 2016, March 2017 move as well. So I think that's a really, really easy look at the moment. If it drops down, it's an opportunity to accumulate. If it goes high, it's an opportunity to distribute.
Okay, let's move on to Brazil. What's going on here?
Well, this fulfilled a pattern. It fulfilled a beautiful reverse head and shoulders pattern. It got to targets X and X1, and that was it. And I thought, the last time I spoke, I said, let's just done with it. I'm not quite sure what's going to happen next.
Right.
Then, they've had a holiday, remember that recently. That's why you don't have any action on the market. You had, on the day prior to the holiday, a key reversal up. A higher high, a lower low, and above or below, but in this case above, two previous closes. We're going to have another test of that trend line down we've seen from the Pitchfork, which is the upper tine of the shift Pitchfork, and that's trading around about 332. We're going to have a test of that. We'll probably have a test of 332.80, which is a fib resistance, and possibly even the highs, and even go maybe a little bit higher. It looks that way at the moment. I draw your attention to the crossover of the moving averages underneath the market. That's a rare pattern where you've got a bow tie formation where all three, it needs to be three, it's rare it's four, but usually three moving averages come in together and then come out again. They usually, it's in the wrong order because it should be short, medium, long, and going out the opposite way, obviously. It's or the same way. It's not doing that. It's coming in with medium, long, short, medium, and it's sort of going a little bit sideways. Usually the direction is, if it was done properly, within, let's say, 15 to 20 days after the actual crossover, you'll see a direction in the move of that moving average, the general direction of the moving averages. This one is unusual because it's coming in sideways and it's not in the right order, but it's something to bear in mind. At the moment, X3 still looks like it could be a target if this is a halfway hesitation, the whole of the late October, early November action, and that's trading up around about 341 or something like that.
Okay, as clear as the midday sun in Jamaica, as they say. Eddie, thank you very much.
Thank you very much.